everyone, how are you all today? So welcome back to my channel named Learning to Learn, and today we'll be discussing about various types of banks. We have completed 3 videos so far. So we have completed what do we understand by scheduled bank, non-scheduled bank. Then we talked about public bank, private bank, cooperative bank, commercial banks, industrial bank, agriculture bank, uh, central bank, and as far as I could remember, indigenous banks and foreign bank as well. So we have completed around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different types of banks. Now we are going towards the end of the types of banks, which are unit bank, branch bank, and then we also have payment bank and small finance bank. So let us try to understand all in detail. First, let's start with unit bank and branch bank. Now try to understand, these are banking systems. These are not literally the types of banks. These are just the system, like how the banking works. So in olden days, like the traditional approach or the old approach, I could say, there we had unit banking system where the banks operate through one single branch, where everything was not connected with each other. At that particular time, what happened was, the logical thing to do, that there was a branch and you had to open an account in that particular branch. You can deposit and withdraw only through that particular branch, because there was no connectivity across the branches. So this was the totally old approach or the traditional approach, and only because of lack of communication, lack of infrastructure facilities, and lack of networking among the branches, this system was used. So this was, you can say, the basic foundation of banking system. So unit banking was a very simple way. You just have to open a bank account in a particular branch. You can withdraw from that particular branch only. You can save your money or deposit in that particular branch. So this was unit banking system. Each bank in this system is separate from other and does not have any branch. So in this system, what used to happen is, if a bank has even multiple branches, every branch was considered as a separate bank. It was not connected with the different branches. Whereas right now what we use is branch banking system, where one single bank has different branches across the country, and if we are in the same bank, even if the branch is different, it doesn't matter. We can open the account, we can save our money, we can deposit, we can withdraw with the help of ATM, and even online transactions also can be done. So this is the updated system, or you can say the new system or the modern system, where we are actually able to use banking in a more detailed manner, only because right now we have that kind of communication systems available, that kind of networking available among the branches. So these banks operate through multiple branch in the banking system. Some of the branches may also be in foreign countries, that is also possible. Head office controls the entire banking, entire you can say branches. So there is a head office for each and every bank, and whatever head office decides, every branch needs to follow the same. So this is called unit banking system and branch banking system. Unit banking system was a traditional system or old system which is not actually practiced as of today, whereas the branch banking system is actually practiced today and is used by almost every kind of banks in India. So this was all about unit and branch banking. We also have two different types of banks. The first is the payment banks and the second is the small finance bank. So let's first talk about the payments bank. Payments banks in India is like a new kind of banking which was introduced by RBI. So RBI helped this particular concept to come into existence. These banks can accept a restricted deposit which is currently limited to 5 lakh per customer and may be increased further. These banks cannot issue loans or credit cards. So these are payments bank. These are very small banks and they have various limitations. They cannot issue credit cards, they cannot provide loans, but they can accept deposits. They cannot accept deposit more than 5 lakhs per customer. Both current and savings accounts can be opened by these banks. Payments bank can issue ATM cards, or you can say debit card can be issued, but credit card and loans are not to be issued. In February 2015, RBI released an list of entities which had applied for payments bank license, and the first payment bank was Bharati Airtel. So these are the important things which I have underlined for you. So whatever I have mentioned here is important. There could be any question, any MCQ kind of thing asked in your examination. If you're giving banking essay examination or UGC net examination, set examination, JRF examination, these questions can be asked. So make sure whatever I have underlined is very, very important. You can expect MCQs from these kind of information very, very easily. Moving forward, this was you can say a new concept. To summarize this entire thing, this was a new concept started by RBI. RBI issued the notifications as on 2015. The first bank started in this type of banking system was Bharti Airtel. The major rules for this is each customer has to be limited with a budget of 5 lakh rupees, means 5 lakh can be deposited, not more than that per customer. ATM cards or debit cards can be issued, but loan and credit cards are not issued. The type of accounts can be opened with the payment banks could be the saving banks and the current bank, or savings account and current account. So this was a summary of payment bank. Moving forward with small finance bank. Small finance bank is a new kind of bank. Just give me 1 second. Okay, small finance bank. A small finance bank is a type of niche banking in India. What do you mean by niche? Niche means when we are concentrated or focused in a particular type of customer or a particular type of market, when we are focused on certain things. So that is called niche. Here, small finance banks are a type of niche banks in India. Banks with small finance license can provide basic banking services like acceptance of deposit and giving loans, etc. The aim behind these is to provide financial inclusion to selection of economy not being served by other banks, such as small business units, small and marginal farmers. So do you know the concept of financial inclusion? If not, financial inclusion is one of the important or crucial parts of banking and financial institution that we are going to do in the last, because that topic is very, very, you can say, detailed one and very you can say elaborative one. So that we need to do first of all. Second of all, financial inclusion means providing financial services to each and every person in the economy, each and every person in the entire market. So here we are not discriminating any person on basis of their caste, creed, religion, income, anything. We are providing banking services to all the people. When we are trying to include all the people, the problem arises that with the small people, means the people who have very small finances with themselves, the small business units, the you can say cottage industries, and those industries who are in lack of finance and they are not very doing very well, like startups or something. So what happens is they cannot avail banking services because there is a cost involved in banking. For example, if you open a bank account at a premium bank or a very expensive bank, you need to maintain 10,000 rupees as your minimum balance. So if your bank account goes less than 10,000, they are going to cut certain charges because of non-maintenance of the minimum balance. But this means that the poor people or the people which have very less income, they will not be able to avail banking services, only because they are not able to put 10,000 always in their bank account. So to reduce these kind of things, small finance or small finance banks are introduced, so that each and every person in the economy, or each and every person in the market will be able to avail all the banking services without paying any extra fees, or without, you can say, getting their amount stuck in a bank account, like that. So this is a small finance bank. Here the words are niche, which is very important. Niche market, or niche is related to a particular group or a particular market, a particular customers where we are focusing. And here financial inclusion means to include each and every person in the financial sector, in the financial market, so that they are getting the financial services and banking services like everybody else. So this concludes our types of banks, where we have done various different types of banks, which includes like scheduled bank, non-scheduled bank, commercial bank, cooperative banks, industrial banks, agriculture banks, foreign banks, Indian banks, small finance bank, etc. So this was the end of types of banks. When we will meet in the next lecture, I think we'll be starting with RBI. So make sure you do enroll to this particular playlist, and do subscribe to get all the updates. That's it for today. Bye everyone. Have a great day. Study hard. Bye.